Hello everyone, a very good morning, good afternoon, and good evening to all of you. This is your host Vaibhav. In today's session of Daily Stock, we are going to look at the quarterly earnings of Dell Technologies. This is a PC maker which also provides enterprise solutions, and it has presence in the infrastructure as well as consumer segment in the tech business, where the Dell provides servers, PCs, and related services. If we look at the performance of the Dell stock for this year, it has been a sort of dream run where it has rallied to almost double in the year's time. If you look at the Dell's share price around the same time last year, you will see that from those levels it has now almost doubled. And just before the release of this quarter's earnings, the Dell was trading at all-time high. And after the release came in, it slumped, and in last two trading sessions it is down almost 10 percentage point, and this has happened simply because the revenues have failed to match the expectations. There has been no revenue growth as was the anticipation in the market, and instead of rising, the revenues have declined, and that has contributed to this slump in the share price of the Dell. But I think the business structure, the expectations for the upcoming quarters are still on the solid footing, and we can expect the revival to take place as the Dell is taking initiative to cut cost and improve its revenues, which are likely to contribute to better margins in the coming quarters. And that is also the underlying assumption for the so- solid rally which we have seen in the in this year. For this quarter, the revenues, as I said, are lower by around 10 percentage point, and the total revenues stand at $22.3 billion. The operating income is at $1.5 billion, with its EPS coming at $1.35. Now, if you look at the segmental result, you will see that the slump has been in both the segments. Infrastructure Solution Group has delivered a decline sequentially as well as year on year. It is almost flat. There is not much of a change sequentially, but year on year it is down 12%. Whereas for the Client Solution Group, the revenue is down 11% year on year and 5% sequentially. So both these segments are having a lower revenue generation for this quarter, and it is likely to take time for these revenues to rebound because last year the COVID impact was still visible, and as a result of that, for the years for 2 years, 2021 and 2022, there was quite a lot of demand for the PCs and related hardware, which contributed to the substantial rise in the revenues. But as things stabilized and the economy opened up, this demand has started to fall off from those highs, and this has resulted in the softness in the PC market, which is a much important revenue generation source for the Dell, and also there is softness in the enterprise market and as a result of that, the infrastructure solution group is staring at this decline in the revenue. But there is also a bright spot with its server demand heating up. The demand for the servers from the Dell is higher, and that is happening simply because there is this phenomenon of the generative AI, which has taken off in the last couple of quarters, and that is driving this demand for servers and networking business, which is up 9% sequentially, and also it is generating a lot more revenues this year than last year. So the Dell has taken some initiatives to improve its presence and offerings in the generative AI segment, with it expanding the portfolio of the solutions, and also it has tied up with Meta and Hugging Face to provide the infrastructure needed for successful deployment of the Meta's Llama 2 models, and a similar tie-up is also there with the Hugging Face. So these sort of initiatives are likely to pay off for the Dell in the coming quarters, and as we see that this generative AI is here to stay, and more enterprises will be taking steps to utilize the generative AI capabilities. We can expect the server business of the Dell to pull in more and more revenues for next couple of quarters, and that is likely to play a positive role. And we will have to look at these rally for the better part of this year in the share price of the Dell from that perspective as well, because it was known for most of the investors in the market that the PC market remains soft. The enterprise segment is also not rising substantially, but a lot of demand is going to come up from the AI infrastructure side, and that is going to be a game changer of sort in near to medium term. And Dell looks poised well to profit from this scenario. Now, if we look at these segment results, you can see that the ISG Infrastructure Solution Group has seen the decline of 12%, with its current quarter revenue standing at US dollar 8.499 billion. The operating income is also lower. The CSG Client Solution Group is also suffering the decline in revenues, with its net revenue standing at US dollar 12.276 billion, with the operating income which is also 13 percentage point lower. And even after this slump, I feel, given the strength and the context of these AI growth, we have the possibility of their share price recovering and rallying higher in the coming weeks, and this can be utilized as a dip which can be brought, but for that we need to watch out for the share price moves for next couple of sessions, and afterwards, if there is stabilization consolidation closer to the price range of prior swing lows of around 63 to 65. If in this price band the price of the Dell stabilizes, then in due course of time, as it starts to rise again, we can indeed think about getting involved for the fresh rally higher towards the immediate swing high of 76. and in course of time we can even expect the Dell share price to break that price band. But for that, it is quite important for it to hold the immediate swing low levels and not decline too much from these immediate support. Only in that scenario we can feel fairly confident of the continuation of this rally which we are observing in the Dell for last couple of quarters, and in that scenario we can also try to profit from this ongoing rally if it lasts in a couple of weeks as well, for next couple of weeks, or you can say even next couple of months as well. So from the short term perspective, the things are looking increasingly bearish, but that is not really the case from the medium term to longer term. First, we consider what are the kind of trading decisions which you can take if your time horizon is only a couple of days. And for that, I think the price band of around 72 to 73 is going to be quite crucial, and as long as the price continues to trade below that price range, we can be confident of the continuation in this bearish momentum from the short term perspective, because after this sharp gap down opening, the price didn't really rise back up again, and this gap is still there, and that kind of gives us a signal that this bearishness is likely to prevail for next couple of sessions, if not more. And as long as this momentum is bearish, it is better for us to continue to trade with a bearish view and keep looking for short selling opportunities if your time horizon is of short term. And for that, as I said earlier, also the price range of around 72 to 73 is going to be crucial. That is where it had recovered on the Friday, and in today's session it started with a gap down open, and from there on it has continued to decline further, and it is likely to end the day lower at around the lowest point of the day. So for today's session as well as for next couple of sessions, the things are looking quite bearish, and I feel it is better for us to go with the flow and continue to trade with a bearish outlook. Now coming to the larger time horizon, first we consider the medium term possibilities, and for the medium term the immediate swing low is around this price band of 63 to 64, and this is going to be a crucial area to watch out for the next couple of weeks. And if things stabilize and the Dell share price starts to see some buying interest around these price levels, then we can indeed take our chances and go for a buy on dip strategy. And the formation is somewhat similar on the larger time frame as well. If your view is for next year or two, even in that scenario, the formation is of higher highs and higher lows. But right now, the share price is trading quite close to the all-time highs. So if things stabilize and there is consolidation for next couple of months without seeing much correction on the lower side from the current price level, in that scenario I think we can hope that in course of time the Dell will start and resume its rally higher. So for medium term as well as for the longer term, the trade with the higher possibility is to go long. We have bullish momentum in the medium term to longer term, but as I said earlier, the momentum is bearish if you are a short term trader. So, in the short term, the things are looking bearish, but that is not the case if you expand the time horizon and go for a medium term to longer term view. Then it becomes a wait and watch kind of scenario, because right now it is not appropriate to buy, but it is not really appropriate to sell either, because the risk reward ratio doesn't look favorable if your time horizon is higher, and it makes much more sense to wait it out and allow the things to unfold over next couple of weeks, and you will have further clarity on what to do, or to simply sit on the sidelines. So that's all from my side for today's session. If any of you have any query or any idea to share, do write to me the feedback, and I would be more than happy to take the discussion forward. Thank you all for joining in. Have a fabulous day ahead, a fabulous week, and of course, a fabulous month. Thank you all for joining in. I'll be back tomorrow with a equally interesting stock to work with. Do come back. See you next time around. Goodbye.